Hey, this is Jeffrey with another edition of Stock Smart, March 26, 2021 edition. Hope you're all doing well. Some bits of news. Market's moving up a bit today. We are oversold on the S&P 500 oscillator. So if you're interested in something, it's time to dip a toe in the water and take some bites on things you like. Also, we're heading into earnings. We're about 3 weeks away from bank earnings starting. And that's when we're going to see a move back into some of these ultra growth stocks and the tech stocks as people get ready to have earnings again. So we have catalysts coming. Lots of catalysts, not a lot of catalysts right now in the market. And we are seeing maybe a drop in interest from the retail investor that's gotten crushed probably lately in all the growth stocks and the NASDAQ stocks. So maybe time to dip a toe. If you're watching on YouTube, hit the subscribe button below, the red subscribe button. Thanks, we appreciate it. Big announcement coming on this show next couple weeks. I'll let everyone know. Really excited about it. New content, new topics to talk about, whole new ballgame. So VIX is down slightly, falling under 20. You know, this may be a good indicator of the retail investor kind of pulling back from the market. And this is what I'm seeing. So the Cboe Volatility Index, it's a real-time index. It represents the market's expectations for the relative strength of near-term price changes, calls and puts. It's derived from the prices of the S&P 500 index options with near expiration dates, so like 30 days. And the VIX used to sit at 10 to 12. And that was a normal read for the VIX, 10 to 12. Now in the last year, because of all this increase in options activity, again, which is part and parcel due to the retail trader being so active in the marketplace, that we're getting this boost where the VIX now sits at 20, 21, where it used to sit at 10, 11, 12. And so the VIX may be really a good indicator. And a lot of these newer kind of retail investors were really dipping heavy toes in options as we've seen record numbers of options being bought, never before seen numbers of options being bought. And so the retail trader really bumping up that baseline number for the VIX. So now seeing it dip below 19, you start to think, or I started to think, this is because we're getting less input from the retail investor. And I wonder if it's because they're going back to work. That would be normal. Because again, we talked about it on other shows. The network operations department at companies, they monitor your traffic on your computer. They just do. They always do. And again, it started because people would visit porn sites and they can't have that in the workplace. So they monitor what you're doing essentially. So now you're going to get these network operations or these companies that are going to block a lot of these sites that people are wasting time on. So you're seeing less options activity, potentially because people are going back to work, potentially because they got slammed because the NASDAQ has been getting slammed, and potentially the NASDAQ getting slammed could be the retail investor getting out of the market as well. But it is a reaction, of course, to inflation and prices going up, and the price you pay for these future earnings gets more expensive and has to be adjusted down because of inflation, because, you know, things cost more. Borrowing money costs more. It's kind of interesting. It's an interesting rumor that I heard yesterday about COVID kind of circulating. And, you know, people just do this. But the rumor is that with regard to COVID, that if you get a COVID vaccine and you die, that essentially you may not get coverage for your life insurance. So the company that was in question that the story broke on is a company called Manulife. And they spoke out and they denied the claim. They said that despite the rumors on the internet and from people person to person, it has no impact on claims in the future. You know, it's interesting. I don't know. It's a psychology of it. Insurance companies deny claims for things like suicide, of course, or something where you lie on an application. But from what we're hearing is there is no reality of this rumor. It's becoming just probably an urban legend. There's a great graphic novel, by the way, if you like comic books and that kind of thing, urban legends, and they're all done in comic form. It's really great. I don't know if you've ever seen that, but this is an urban legend. There'll probably be, how many urban legend comic books should you have just on COVID stories? First off, dating and relationships, how people interacted, people got COVID. Really a lot of interesting stories. And then you have this life insurance story about COVID, which is kind of interesting as well. Let's take a look at a stock now.
Stock watch.
Okay, we're going to do the marketing language. You're going to know what this is right away because we talked about it on the show many times. Blank, okay, is a blank check company. So you should know what that is already. If you've been paying attention, you know what it is right already. What is it? It's a SPAC, right? A specialty purpose acquisition company, okay? So for the purpose of effecting a merger, capital stock exchange, asset acquisition, stock purchase, reorganization, or similar business combination. So again, SPACs, they go public. They're not doing that well overall right now because I think the market is drying up. The retail investors and fueling these. And it's just there's been a saturation. Again, we are going to hit a record number of IPOs this year, largely due to the 200 plus SPACs we've seen already in just 3 months. It's incredible. So I think the appetite for SPACs, it's like if you ate pizza every day. Pizza's great. People eat pizza all the time. Some people eat it 2-3 times a week. But if you eat it every single day, like eating these SPACs, you're just going to get tired of it. And that's what's happened. So we've gotten this oversaturation of SPACs. But this one's a little more interesting to me. So the ticker symbol is BOWX. B as in boy, O is in orange, W is in wall, and X is in X-ray. BOWX. Company in Menlo Park, California. They raise money. So they've agreed to go public with WeWork. Now, this is pretty interesting to me because WeWork had a valuation at one point in the 50 billion range, right? And so now the valuation on WeWork, which they lease flexible office space. And this is a time when you probably need flexible office space because companies don't know how many people are coming into the office. They don't know what's going to happen with their production and with their companies right now. So they need flexible office space to put those employees in places where they, maybe they want to work from home, but they want to work from a distance and they have a WeWork office there and they can go have their employee work there. So WeWork has all these office spaces in all these buildings all over the United States. And this company going public again, BOWX, at a $9 billion valuation. Again, this company was valued at 50 billion. So it's trading at like 1/5 of the value it had just 2 years ago. So the CEO on CNBC today stated that if WeWork can get 100% occupancy, and I have friends in commercial real estate, 100% occupancy at this point is really difficult. That's a futuristic look 2 or 3 years down the road. But that's $1 billion in revenue for this company at 100% occupancy. Now that's of their current holdings, right? Because they're going to be adding holdings as it gets more, there's incentivized and as they build up space. But at 100% occupancy of the space they have right now, we're talking about generating $1 billion of revenue. And I think these companies that have employees are going to want to work out flexible situations for their key employees. And that means coming up with creative solutions to getting them in an office space, even though they may not want to go full-time back to the office. And this kind of situation that WeWork puts together is a situation where you can have a lot of people probably filling into these office spaces. So again, we're not in love with the SPACs in general. This one's up, BOWX is up 8% today. Seems like it's undervalued. So if you're interested, this is not a typical SPAC, right? We know what they're buying. They're buying WeWork. They're buying office space, flexible office space into the future, which we know right now people are still sort of working from home, maybe coming back to the office. A lot of those leases, commercial real estate, my friend who's in commercial real estate, they have rent signs all over. I mean, there's spaces and spaces and spaces available. A lot of it is in the restaurant business because the mom and pop restaurants are gone. Most of them have gone away because they couldn't handle the 1 year or the reduced revenue for a year. But BOWX, interesting. Take a look at it. So I got a question. Thanks. Keep the questions coming to Jeffrey at jeffreycamus.com. We appreciate the questions. So Fred wants to know, he's heard about President Biden's new plan, which is a multi-trillion-dollar bill focusing on infrastructure. And he wants to know what's the best way to play it in the stock market. First off, this is not new. So when you go from like a depression era or recession, governmentally, the president, and this was done by FDR in the 30s with the New Deal, build infrastructure, get people working in jobs, improve the roads, the bridges. They all need improvement. So this is what they're trying to do. We're talking about a multi-trillion-dollar bill on infrastructure that's going to increase jobs, get people back to work again. So this bill is going to be announced, and both sides agree to it. So Dems, Republicans, they're in alignment. This is going to happen. It's always great to build our country back up again by putting money in the country, getting the people who live and work here back to work with good paying jobs. So he wants to know, Fred, which way can I maybe play this in the market? What companies will do better from this infrastructure bill? And there's a bunch. There's some obvious ones, right? You have the tractor companies that do a lot of building and supply. So you have John Deere and Caterpillar, right? So those are pretty obvious right off the bat. So Caterpillar, right? Stock CAT. That's a very good stock. Has a little bit of a dividend, about 2%, but they're known for construction. That's what they do. Asphalt pavers, excavators, pipe layers, backhoes. That's what they do. So Caterpillar is a great company. John Deere, ticker symbol DE. This is a little dividend, about 1%. But they make tractors. They do a lot more than that, though. They produce construction, forestry equipment, earth moving, and road building. That's what they're going to be doing in this build. So if you want to get into individual stocks, Deere and Caterpillar are two ways to play it. Then you can also look at something like Vulcan Materials. Vulcan Materials, which is ticker symbol VMC, they're the largest producers of fill, things that you need, crushed stone, sand, gravel. A little bit of a dividend, under 1%. But this is a company, if they're going to be building roads and bridges, they need that fill, asphalt, and cement, including Martin Marietta, which is MLM. Then you maybe look at Vale, which is a miner of iron ore. And then you have something like Nucor, which essentially is going to take the iron ore, turn it into steel. And so those are all interesting ways. Now, if you want to just go and maybe grab the basket of stocks, right? Because that's an easier way to play this. You have an ETF that kind of sits really well in the space. You could play the XLI, which is industrials, which just kind of gets you into, the industrial sectors. Or you can get into an ETF called PAVE, which is PAVE, which essentially is the global U.S. infrastructure development ETF. This is up today about 1.65%. It has a great chart breaking out in the right direction. And this is an interesting one to play. And so if you believe that this infrastructure bill is going to impact the U.S. and our development, our building, then PAVE, ticker symbol, PAVE, is where you want to be as these jobs roll out and all these companies that benefit. And that's a better way to play it than an individual company because you get the diversity built in. And that's the beauty of these ETFs. So, hey, thanks for listening. Appreciate all the questions. Keep them coming. And we'll see you again next time on Stock Smart.